Today is March 15, 2023, and we're going to go over market report, see what's going on with the banking system. Maybe you guys saw some news. We'll go over that, and we'll go over the closing cost. So we know that there's a down payment and then there's a closing cost. And we know, for the down payment, straightforward. If they're putting 10% down, they got to bring that 10% as down payment. But not everybody knows about the closing cost. So we're going to see what's included in your closing cost. Okay. Meanwhile, if you guys have any questions, just throw it in the chat box and we'll go from there. Right. So let's start with our Silicon Valley Bank news that happened over the weekend since Friday. So this was a really solid bank, one of the largest banks out there, and then all of a sudden it collapsed. So in a nutshell, what had happened was that people, their clients, were putting in the money into their bank, right? So they have funds available, and banks usually invest that money into some other businesses so they can make more return on that, right? So Silicon Valley, what they did was that they purchased government bonds with that money. So when they purchased those bonds, and they purchased it on a low price, and now after years later, now the market, the interest rates are gone up, and they needed cash because their clients were coming to them and they want to withdraw the money. But since they don't have the money available, they had to sell their bonds. So when they kept selling them, they were selling them at a loss. So just to give you an example, let's say they bought a bond for $100. Now they were selling the bond for like $60 and taking a hit about $40 on each one of them. When they kept doing it, this was going in billions of dollars. So now finally over the weekend, they simply gave up. They don't have enough funds available to satisfy their clients. So what we started hearing was called a bank run. So if one um, person that's trying to get their money out and they can't for some reason, they'll spread the word, and another person will go and another one. So they had a line of people just trying to withdraw the money and they don't have any money left. So that's why the government had to take over. They stopped that bank now, and there's going to be a new management. And maybe you heard the news from Biden that they are fully taking care of all the clients that deposited the money, but not the investors, right? So the people who actually deposit their money, they will have access to that fund starting today. So because of this news, on Friday, the stock market, for this Silicon Valley really went down. With that fear, a lot of other bonds and everything were going down as well. So with that being said, the interest rate went lower on Friday and Monday morning, right? So a lot of our loan officers, including Josh, was just trying to lock in the interest rates for the clients. We know that there's a collapse now. We know that the interest rates are going lower. So why not use that, right, for the benefit of our clients? And that's what we did. So when the interest rate went lower, we try to lock in much as possible. So let's go over the interest rates. So on Monday, we saw this dropped to 6.50. So the interest rates on fixed 30-year fixed conforming loans, they were around 6.50. And as you can see today, they're at 6.75. So they went a little higher, right? So whoever took advantage of it on over the weekend, on Friday, over the weekend or Monday, they made the right decision, or at least will benefit from that collapse for that period. So for 30-year, we see 6.75. For 30-year FHA, we see 6.25. And these, like I said, we're tracking them on weekly basis now. So you guys have a good idea, and where's it trending, when it's going up or when it's going down, right? And that's the main job for the loan officer too. We want to think of our clients, put them first, and see when they can benefit from that interest rate, right? Because that interest rate is going to be locked in for 30 years. So even if the market is going up or down after they lock in, nothing will happen to that loan for 30 years. So the loan officer should always make sure that the client is getting the best interest rate possible for that particular client. Okay. And according to our Freddie Mac, the interest rates are very similar to the Mortgage News Daily. They are at 6.73, and this was updated on the 8th. Okay. And this is another website that I want to share with you guys. This is from Consumer Financial Protection Bureau, CFPB, and this gives you interest rates ranges for New York and other states too. So once you are on this page, you can select which state that you want to see the interest rates for. You can put in property value, right? We just put in $700,000, and let's say we are putting down 10%, $70,000 as down payment, right? And we are in Queens, and this is a fixed rate for 30 years, and it's going to be conforming loan, right? Because this is going to be 10% as it considered as a jumbo, so this is what you're seeing. So maybe we don't want to see jumbo, and let's put down 20%. Oh, still comes up. So let's say there's a 600,000 house, which is more realistic, 20% down, and they're going with the conventional loan, right? So based on this, once you fill that out, on the left side here, you will see a chart and you will see this here. It says in New York, most lenders in our data are offering rates at or below 7.125. So it's very similar to what we're seeing as that national averages. So you have your client, right? Because like we said, these are the national averages when we see, right? But when your client is actually, putting in the application, their FICO score, their income, their down payment, all that matters. But you always want to stay in the range with the averages. So if your client is getting an interest rates around 7%, that's what the market is right now. And like we always say, if someone tells you that, there's another lender out there that's offering 4% interest rate and it seems too good to be true, usually there's a catch, right? And that loan estimate that they get usually will tell them what the catch is. Either they're paying down the points, buying down with the points, their interest rate, or they're charging extra fees or whatnot, right? But if the interest rates are around 6 and 7, that's what we are averaging these days. Okay. Any questions on that, guys? So, like I said, there was I know there's few new agents that just joined. So there were, a lot of loan officers, not just our brokerage. A lot of loan officers were locking in rates Friday, even over the weekend and on Monday, just to benefit our client, right? Because the interest rate did drop about, like we said, this was about 6.5 or even a little bit lower than that on Monday morning. Okay. So the next hike or the next Fed meeting is going to be on March 22nd, and most likely they're going to increase the interest rates again a little bit, right? It might be 25 basis point. So when the Fed increases it, usually it doesn't just affect the mortgage, but it affects your card payments, it affects all the other, indexes in our, economy. But interest rates do get affected in the long run. So if we see that increase, most likely our interest rates will increase again on March 22nd. Okay. And we said, the clients that already are renting right now, right, and they're trying to purchase their first property, even on the renting side, they're feeling the pain with every year the rent being increases, right? So they're increasing even for one bedroom, two bedrooms, three bedrooms, all across the board. Even, there's few people that's renting out the basements, legal basements, they're increasing the rent as well. So, overall, sometimes the clients really got to think, hey, should I keep paying the rent, or I have money sitting around and I have my credit score is good? Should I see if I qualify for a loan? We just had that conversation with another agent when they were showing a rental property. She was well qualified to purchase, but she did not know anything about FHA loan. She did not know about 3.5% down payment. So he was just educating her, and she's actually going to the loan officer and getting pre-qualified and pre-approval to purchase their property. So when you, as a realtor, when you're having that conversation, you don't want to force them or tell them, hey, you should be, just telling them, hey, you have options. You have options to pay the rent of $2,000 or purchase a property and maybe have a $3,000 mortgage, which you still can afford and have your equity built over the years. And being a homeowner, obviously, there's a lot of more benefits than just renting out, right? So that is your rent versus buy. Okay. And we're not just seeing it in New York, it's across the whole United States. You guys can see this from 2018 to 2023. All the major metropolitan in California and Florida, New York, New Jersey, all of these states, the rents have been increased. Okay. Okay. So with higher interest rates, as we said, the market, there's a lot of borrowers that were qualifying before do not qualify. So the people who are qualifying right now, you want to treat them the way you should, and you want to tell them about the seller's concessions, right? And according to this article, this is through Redfin, nearly half of the homes, right, the home sellers are making concessions, even if it's 2%. They can go up to 6% for FHA loans, but as long as your sellers are making or willing to do concession, you want to ask the listing agent. That would, maybe your client needs helping hand with the closing cost, or whatever the case might be, but you want to offer concessions or ask for concessions, right? So if half of them are doing it, even if you're doing four deals, one deal has a concession, that'll be 25%. So you want to, every offer that you're making, see if your buyer actually needs a concession and request those concessions. Okay. And in addition, it's saying the record of 13% of sales included price cuts and final sales below the list price. So this is what we mean when the market is adjusting in most cases. There have been rare cases where, you make an offer. This happened a few days ago too. And, they made an offer for, I believe, $770,000, and the contracts were sent out and the contracts were not being signed. The buyer signed it already, but the seller was not signing it because they were waiting to do another open house over the weekend. They did do that open house over the weekend. They got a few more offers, and the current buyer, even though he signed the contract halfway, right? He signed it, but not the seller. They had to increase their offer by $10,000, which we should not be seeing that, in this day and age, just because the way the market is. But there are some rare cases you have to increase your offer, and your buyer's willing to do that. If that's the case, then you do it, but as a realtor, start off with a little bit below list price, and that's what we're seeing, around 13% reduction in price. Okay. So when it comes to home buyers, you want to focus on single women that are out there too, right? Because these single women are building wealth through home ownership. And this is an article through Mortgage Note, stating that there are single female-headed households, including widows, separated, and divorced, has risen by 1.4 million since 2019. So you know that 1 million homeowners out there are female, right? So even if they're single, not living with another person, they might have a good job, they might qualify. We do not discriminate in any shape or form, but you want to actually start targeting these people as well as their home buyers, because if you know that they qualify, you want to start showing them. You don't want to see, hey, if there's someone else is the decision maker. Don't assume anything else. She's the one. She's the one that who's going to be looking at the house. She's the one who's going to be making the offer and moving on with that application. So please, when you're speaking with your clients, treat a single woman just like how you would treat another buyer out there. Okay. And start showing them. Next, let's look at the sold median price for Queens. We saw this on the last meeting for Nassau. And for Nassau, if you look at the chart here, right, the prices for current year were actually decreasing for Nassau. But for Queens, the prices have not been adjusted since, you can say, around September of 2022. So they were at 890 as median price, and even in February they're at 900,000 compared to last year, which was at 855. Okay, so whoever bought a house last year compared to this year, there's at least $45,000 equity sitting just within 1 year, and that's in Queens. So different areas will have different scenarios and different data, but we're comparing it from Nassau to Queens. And even if you look at this chart here for last 24 months, there's only one trend, which is going up, right? Even if it's five to $10,000 increase, the trend is still going up. All right. Any questions or concerns, guys? All right. So last few meetings we've been talking about our for sale by owners, FISBOs, right? So we pulled up a few stats for FISBOs. So you want to have a conversation with these for sale by owners, to sell the property with you as a realtor, and there's a lot of benefits for that, right? So as a for sale by owner, the number one concern that they have is that I don't want to pay the realtor, but they're when they're doing that, they're losing a lot of money too. Look at this. It says a typical FISBO home is sold for $225,000 compared to $330,000 for agent assisted home sale. So this stat you should know right off the bat. Like when you're talking to your FISBOs, hey, you're asking for this price. Maybe I can get you higher because I'm a realtor. I know the market. I know what property sells. I know how to negotiate. And my goal is to get you higher than what you're asking for. Yes, you have to pay me the fee, but even after paying the fee, you'll still be in better hands than compared to selling it yourself. And usually FISBO's method used to market their home first is that majority of the time they're telling their family, friends, and neighbors, right? That's majority of the case. And as realtors, we're not even doing that. We're not telling our friends, relative, or neighbors at all. We're putting on MLS. We're promoting in different ways. Yard sale, he will put it for sale by owner without any information, just their number. You put up your yard sale sign, it will have your photo, really professional looking with your phone number, and it makes you look better, right? Other couple of things that you notice here is that most difficult task that the FISBOs have or the for sale by owners have is preparing and fixing their home, getting the right price, understanding and performing paperwork. Even if they have an attorney, the attorney does not come in until you have an offer accepted and the contract needs to be sent out. You as a realtor are playing that role to negotiate, get the right price for your owner, right? For the seller. And obviously you go through these paperwork all day long. You know exactly what agency disclosure is, the offer letter is. You can put in the notes for the contingency, what needs to be added, what doesn't need to be added. You're doing all that for them, right? And that's going to be your selling point, that hey, I understand the paperwork, I'll be taking care of everything until the closing for you, right? And selling within a planned time, they might want to sell it for 3 months. Is really difficult when you're only limited to limited eyes of seeing those properties, right? So even if he's doing an open house on through Zillow or whatnot, it's not a lot of people showing up through that because it's just one channel compared to what you're doing, right? And they are not able to attract potential buyers. They're not seeing everybody out there. Those are the simple facts. Anybody that's driving by sees that small, for sale by sign, maybe they'll call them. And that's why that property might be sitting on the market or in their hands for longer than expected. You as a realtor, maybe you put it on MLS, you list it on MLS, and you put it as an open house, and it sells or goes under contract within 30 days, 45 days. Those are realistic numbers, right? But if your client is going to be putting a sign for sale by owner and wait 6 months, when they're delaying whatever plans they have, maybe they want to move out of state, maybe they want to buy another business in a different state or whatnot, whatever their situation is, family, friends, whatever their situation might be, you can make that happen faster, right? So you can sell it for a higher price, you can sell it faster. You're going to do all the advertisement, put money out of your pocket to promote that property. So why wouldn't they want to go with you compared to try to sell it for themselves? At end of the day, you're going to help them make more money regardless. And if that person has only one property, that is their savings, and that is your job to make sure that you give them the maximum amount of equity possible. Okay. Any questions on FISBOs or any of these stats, guys? All right. Next, I saw this property this morning. This is in Roswell, single family, listed for 450, and it has 6 bedrooms, 2.5 bathrooms. Um, the taxes are $10,000. So everything checks off as a first-time home buyer for this property, right? So if you have a client that's looking for a single family, I would highly recommend that you take a look at this property and send it to your clients, so they can ask you to schedule a showing. Okay, because everything checks off. 6 bedrooms, 2.5 bathrooms, with this tax, and the lot size is good, 6,500 square feet. In my eyes, everything checks off. Once you guys show the property, and if you guys find a lot of flaws in it, then you guys probably want to go lower than this. But most of the time, this price is very attractive for the first time home buyers. Okay. So I do want to point that out, that every time a client goes to our website, ljrealtyteam.net, um, goes to our website, ljrealtyteam.net, out of our 60 plus agents, a random agent's information will show up here. Okay. And this is the KV core number. But if they're on your website, so we want to use Spiro, we want to go to his website real quick and see the difference there, right? When you're on your website with your domain, then they will see your phone number. Okay. And when they're on our website in general, then they will see the KV code number. But random agents information show up here. Okay, so do share this property with your clients and see if they're interested and they want to see the property. Okay. All right, guys. So we're gonna talk about closing cost, right? So these, every time you're about to make a purchase for a property, you have your down payment, which most people know about. Hey, I'm purchasing a house for 500,000. I'm gonna do 10% down payment, and that's $50,000, right? So that's what they assume. They think that we just need $50,000 in their bank. That's not the case, right? They have to have closing cost in their bank as well, and the amount for that is typically around 3 to 5% of the loan amount. Okay, so you want to go with at least 3% minimum. So let's do the calculation here. If it's a $500,000 property minus 3%, $15,000, right? So they would need that 55,000 plus 50,000 plus 15,000. So that same client should have $65,000 in their account to cover the down payment and the closing cost. Okay, if you just educate them on this when you're making an offer, right? When they're saying, hey, I want to put down 10%, you just want to tell them, hey, I'm not a loan officer, but I just want to make sure that you have enough in the closing cost funds available as well. They can talk to their loan officer and they can give them more accurate numbers. But we're going to go over is what should be included in those closing costs. Okay. So the government made a very strict rule that after 2008 collapse, that every loan officer must provide a loan estimate. The loan estimate is given at the time when the application is being done, right? Before that, this is the first initial thing. They can go to 3 different lenders, and each one of them will give them a loan estimate. It will have all the fees that they will be charging and the fees that will be included for the closing cost, and they want to compare that with other lenders. But now you already selected one of the lenders, right? And he said your closing cost is going to be 3%, $15,000. And now the time comes for clear to close, and you guys are already so excited to close this deal. And then he tells you, no, it's not 15,000, you need 20,000. Who's supposed to come up with that $5,000? They don't have that $5,000. right? So that's why the government said, hey, when you're giving a loan estimate and you're giving a closing disclosure, CD. So loan estimate is LE, closing disclosure is CD. That both of them should be very similar. They have different tolerance level for different sections, but they should be very similar to what they offered. If the loan officer says in the beginning as a loan estimate that your total closing cost is going to be 20,000, but on the closing disclosure is actually lower, 5,000 to 15,000, then there's no issues because your client is saving $5,000. The only problem is if they increases and they don't have that money. So the government made sure that, hey, all the loan officers provide a loan estimate and the closing disclosures, and so this way the client can compare those numbers, right? And the CD, the closing disclosure, must be given 3 days prior to the closing, right? So there's always a 3 day cooling time, as we say, that the client already reviewed the closing disclosure with their loan officer. They still have they have to wait 3 days and then they can close that deal. Okay. So what's included on that closing cost, right? So the one is your application fees, right? Typically, application fees should be around $500 and may vary from lender to lender, but that's your application fee. Then you have your appraisal, right? Appraisals are done through third party, and typically they are between $300 and $600. And most of the time, this is paid before the closing. It still will be listed on the closing disclosure, but it will say that you pay this amount already to the appraisal company. Okay. Then is your attorney fees. Attorney fees, as we see that the lowest we ever saw was $800. The highest we saw was $2,000. But on average, they're around $1,500. If your client wants to go with any attorney they feel, but just tell them the average price is around 1,500. If your attorney is charging you 1,500 or close to that, you should stick with them. If they're charging you $2,000 or more, you should go away from them. Go with someone that's charging you reasonable. Okay. There might be a closing fees that's associated with the escrow company or the attorney, right? There might be a courier fee. This is for the all the documentation to be mailed out, right? And it's typically around $30 for that. And this is for only if the lender is charging that. There's a credit report fee. This most of the time is covered by the lender, right? If it's not, it's typically around $25 per person. Then you have your discount points. As we mentioned before, that today's interest rates might be 7%, but maybe one of the banks will say, hey, we can give you 5%. How do they offering 5% compared to the market rate of 7%? They're saying that, hey, you can buy down your rate, right? So this will be the upfront money that you have to give to the bank, but they will reduce your interest rate and you'll have a lower monthly payment for the rest of those 30 years. Is that a benefit to you? You have to actually compare that. Depends on how much fee that you're paying and how much discount points are you actually getting, right? If you're going to pay $5,000, let's say, if you cannot recover that $5,000 in 2 years, that is a bad call. You don't want to make any payments for that if you're not going to get that money back in the first 2 years, right? Then you will see your escrow funds. Escrow means it's a savings account, right? This is a prepaid or reserve fees that the lender will tell you, hey, I know you qualify today to make these payments and there's no issues, but we want to have a safety net. We want to have a savings account for you separated. This way you will pay your property taxes and your home insurance every year on time, right? Because they don't want any lapse in your insurance, and they don't want any you don't want to be late on your property taxes. As you know that if you're late on your property taxes lien becomes number one, and the government can take over your property if you are behind your property taxes. Okay. We have seen properties go to foreclosures due to uh, clients not able to make their property taxes on time, right? So that's why you have your escrow account sitting there just to help you out with every year with those payments. Okay. And if you have an FHA account or FHA loan, right? If you're taking out an FHA loan, there's going to be an upfront cost too. And that's going to be 1.75% of your base amount. And this is the upfront cost. Some of you guys always ask, hey, what's the benefit of conventional and FHA? Well, with conventional, you don't have to pay 1.75 upfront cost, right? So with FHA, you do. So let's say you're borrowing $100,000, the MIP, your mortgage insurance premium, is going to be around $1,700. Okay. Any questions on that so far, guys? Okay. And if your property is on or near the floodplain, right, there might be additional fee of $15 to $25 for flood certification. We usually see that on ours around $8 for that, right? So it's just a small fee that you'll see on your loan estimate or your closing cost. And then you have your homeowners association transfer fee, and this is usually for your condos and co-ops, right? And they want to make sure that the seller is up to date and the buyer is up to date when they're doing that transfer. All the fees are paid up to that particular date. This is when the attorneys come in, and this is where the lenders, the bank's attorney comes in as well, and make sure all the numbers are aligned, all the taxes, all the payments that are due are paid up to that particular date. Let's say they're closing on March 16 tomorrow, they're going to count all the first 16 days. That should be the responsibility for the seller, and then moving on should be the responsibility for the buyer. That all those fees are calculated by all the attorneys put together. Okay. As we know that home insurance is required, right? Every lender requires them until the home is paid off. Even if the house is paid off, the homeowner should always have insurance, because you don't want to have something, $1 million property sitting there and you don't have any insurance on it. The insurance typically costs around $1,500 for the whole year. It can be more or less, but average is $1,500. And you want to have all your clients have that home insurance shopping around. This is when you're under contract. They can contact us as a LG insurance agency. We can get them a quote, but they can go to any other agency as well and compare those quotes, right? And the loan origination fees, right? This will be the cost to process and underwrite your loan. And typically we see that, this fee, this is in section 1 in your loan estimate and your closing disclosure, and this should not change. If the your loan officer told you that, hey, it's going to be, $5,000 for origination fees, uh, and then on the closing disclosure it should have the same amount, right? Unless you're doing a buy down and things do change. But without anything else changes, whatever fees they told you initially should be the same fees they're charging you at end of the day when they're doing completing the transaction. Okay. And then you have two, well, we have your home insurance, right? The home insurance will cover the house itself. If there's a fire, the house burns down, the insurance company will help you rebuild it, right? But there are two other insurances that you should be aware of. One is lender's title insurance, and one is owner's titles insurance. So lender's title insurance repays the bank if you lose the home to a title claim, right? So if someone comes in and knocks on your door and say, "This is my house," right, and you guys don't have any proof, or you have they have proof and you have proof, and both of you guys are thinking you guys are the owner, then it's a court case, and then the bank will have their title insurance to repay, just in case there's a title claim on that. This title insurance is required, but the title for the owner's title is optional. It's optional, but I still feel like, they should be required for all our homeowners. This is not protecting the lender, but it's protecting you. And it's doing the same scenario. If someone comes and knocks on your door, said, "This is my property," and you have your title insurance, right? You're covered. That title insurance will cover you only if they have a clean title. They know that there's no issues with that property, and you already pay them a fee of between 1 and 2% of your loan amount. Typically, we see that around $3,000 to $4,000 for the owner's title insurance, but it should be required. right? You don't want to purchase a property and then someone knocks on your door and says, "This is my house," right? And then it might be another fee for the pest inspection. It could be we consider as a home inspection as well, just to make sure that everything in the house is good, right? If they the pest inspection alone might be around $100. There's some home inspectors that will do both. Some will not. So just know that this is optional. But again, when you're purchasing such a big property or large amount, why not do these small things just to check off that everything clears off, right? And as we spoke about earlier, that prepaid daily interest charges, the lenders will go again, make sure that up to that particular day that you have your prepaid daily interest charges in hand or in your bank account. And if they're putting less than 20% down, they're going to be making payments for their private mortgage insurance, right? So if as long as it's less than 20%, that fee is going to be included until they hit 20% equity on that property. Okay. And we know that the property taxes, again, up to that particular day, up to that closing date, anything prior is a responsibility for the seller, and after that is all the responsibility is for the buyer. So that's your property taxes. And then the buyer will also pay a rate lock-in fee, right? This is when they're saying, hey, like happened on Monday too. A lot of people like, hey, the interest rates are really low. Let me lock in today. So they're gonna lock in for 30 days. If they want to, they can lock in for 30 days, 45 days, whatever day they choose. But once that expires, they need to extend it. They have to pay another fee to extend that. That's why most of the time a lender will give you a 30-day rate lock and try to close that deal within those 30 days. Okay. And then the county clerk will charge a recording fee. This is for your county clerk government to get paid and put that on paper that, hey, you're purchasing that property. And that's around 100 to $150. Okay. Next fees is your transfer fee, your survey fee. This is optional again. Again, you want to purchase a survey, so this way you know your boundary lines. You know where if your lot is 60 by 100, you know exactly that it's actually 60 by 100 and not 50 by 100. You don't want to just go by the listing agent what he put on MLS. You want to check your geodata. You want to check your property chart, and also do a survey. So this way there's no question. Even after you close, that survey goes a long way for many many years, unless there's a dispute with your neighbor, and you can just show them, hey, this is my survey, this is what I did, I paid $700 for this, and it shows me clearly this is my land and not yours. And if he has a dispute and he wants to do his own survey, and then there will be a court case if actually there's any differences there, right? Usually the first person that shows a survey uh, is does know what they're talking about. But again, if the other party has more issues, then they probably do their own survey as well, right? But to all your clients, you don't usually clients don't want to do a survey as soon as the contract is signed, because we know that there could be many things that can go wrong even when you're under contract. So usually a week before, week and a half before the closing, then you want to do your survey. So this way you know that that $700 that you spend is going to a good use. Okay. And when you're paying that title company, you're paying for the title searches fees, right? This will include all the liens, the bankruptcies, any unpaid taxes from the seller side, right? They will do all that search for you. And that's usually included in your title search. And then the transfer tax, right? Transfer tax, we want to review the contract for this. We can't just assume that the seller will be paying the transfer tax. The transfer should be paid by the sellers. But if the contract has one line saying that the seller will not pay and the buyer will, guess what? At the closing, the buyer will have to pay that transfer tax. So protect your buyers. Make sure that, on the contract it says the transfer tax is paid by the seller. Okay. There's usually just few pages for the your contract. It is your attorney's job to make sure that they know who's paying that transfer tax. Okay. And the last is your underwriting fees, and this is going to be vary from lender to lender, and it's typically around less than $1,000 for their underwriting fees. If anybody's charging you more than 1,000, just know that that's on the higher end, and if they're charging less than 1,000, that should be a normal case. Okay. So all these fees that we spoke about, these are the fees that's coming out from the closing cost, from the buyer side. The only thing that when you let's say there's a $20,000 closing cost, and the lender is putting $5,000 in their escrow account, that is their money just sitting in escrow. So the true closing cost will be 15,000, but the escrow money will be separated, held for later payments for property taxes and their home insurance. Right? Any questions, concerns, guys? Any of you guys had any issues? Oh, sorry. Any of you guys had any issues with any of your clients with the closing cost? It should be no surprises for them. And again, this job is just like when you're having that conversation with your client. If they say, "Hey, what's the escrow account?" We should say is a savings account for yourself. What is it used for? It's used for your property taxes, for your home insurance. So if they ask, "Hey, what are the benefit for FHA loan compared to conventional?" FHA will allow you with the lower credit score, but you have to pay 1.75 upfront cost for that FHA loan, right? A lot of pros and cons. So, these conversation the client should be having with their lender. And when you're showing them the property, if they come up with any of these questions, you should be able to guide them, or at least have some knowledge when you're having that conversation with them, right? All right, guys. Anything in your mind? Anything that you guys want to add? Mhm. Yeah, and we're gonna guide you too. I mean, these are the things that we just want to increase your knowledge. But let's say you're going under contract, we're creating a channel for you in Teams, and we are talking about that deal until the closing. So when the time comes for the loan estimate, we'll tell you, hey, even if they're going with another bank, another lender, we still want to guide them. So even when you're at that level, Julian will definitely help you out with that. All right. Yep. Yep. Anything else on your mind, guys? Right. I was in the middle of this. I didn't get a chance to finish it. Maybe on Saturday, I will have one loan estimate and one closing disclosure, actual, comparing it line by line with you guys, so you guys get to see it. Like in here, you guys seeing the definitions and all that, but you guys will see actual fees, comparing them from loan estimate to the closing disclosure. Yes, sir. Yes, sir. That's perfect. Yeah. So if there anytime the property is valued over $1 million, the buyer has to pay 1% mansion tax. Even if the property is not mansion, is not big or anything like that, as long as the value is above $1 million, buyer pays 1% mansion tax. Right? Thanks for that, Mr. Ali. All right. Anything else on your mind, guys, before we get going?